Ladies and gentlemen, good day and welcome to BSE Limited Q4 and FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Sethuraman, Head Investor Relations, BSE Limited. Thank you, and over to you, sir.
Thank you so much, Faizan. Good evening, everyone. This is Anand from Investor Relations, and welcome to BSE's earnings call to discuss Q4 and FY23 results. Joining us today on this earnings call is BSE's leadership team consisting of Mr. Sundararaman Ramamurthy, Managing Director and CEO, Mr. Nayan Mehta, Chief Financial Officer, Mr. Sameer Patil, Chief Business Officer, Mr. Girish Joshi, Chief of Trading Operations and Listing Sales, Mr. Subhash Kelkar, Chief Technology Officer, and Mr. Kasi Tavadia, Chief Information Officer. This conference is being recorded, and the transcript of this call, along with the earnings release and presentation, can be found in the Investor Relations section of the BSE India website. Before we get started, I would like to once again take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements, and any forward-looking statements that we make today on this call are based on assumptions, and BSE assumes no obligation to upgrade these statements as a result of new information or future events. With this, I would now request Mr. Sundararaman Ramamurthy, MD and CEO, to give a brief overview of the company's financial and business performance for FY 2023.
Thanks, Anand. Good evening, everybody. And thanks a lot for joining the call today. It gives me great pleasure, as always, to address you all today. It's been an interesting journey for me since Jan 4, 2023, when I joined as MD and CEO of BSE. As you may recall, in the last quarter call, I have informed that my primary priority is to make BSE a vibrant exchange. I'm glad that we entered the FY 2023 having made progress in this regard. The major priority areas driving our roadmap are trading segments of equity, currency derivatives, and equity derivatives segment. Some of the changes that we have brought till now are as under. In equities cash segment, BSE has reduced the tick size for scripts below 100 to 1 paisa from 5 paisa. As you know, this is unique for BSE. In currency derivatives, we have introduced another unique feature, new strike price intervals of 10 paisa for our USD INR contracts in addition to the existing 25 paisa strike prices. The equity derivatives segment, I'm happy to inform that we are relaunching Sensex and BankX derivatives contracts with lower lot size and a different expiry on Friday from the traditional Thursday expiry. We believe that these changes will bring more action. This relaunch is happening from May 15th, 2023. It is early days. Still, I am happy to inform you the changes in equity cash and USD INR options that we have already brought in have been well received by the market. We are seeing some positive traction in this regard. I also want to update you that BSE has discontinued the liquidity enhancement schemes that were ongoing for equity derivatives and commodity derivatives with effect from April 1, 2023. In addition, BSE has discontinued software services and hardware infrastructure services that were being offered under the technology program with effect from May 1, 2023. At the standalone level, for these schemes and services, BSE had incurred costs of about rupees 32 crores in FY 2023. The relaunched equity derivatives contract, we feel, will attract volumes, and hence we have discontinued the LES. Let me now start with the financial updates. FY 2023 was a challenging year. As I mentioned earlier, we have, however, made good progress on our main priorities and setting ourselves up to deliver better results in the days to come. Surpassing all previous years' performance, I'm happy to inform that BSE delivered a record year again in terms of revenues to reach a total revenue of rupees 954 crores for FY 2023 as compared to rupees 864 crores in FY 2022, a growth of 10%. Similarly, BSE's operational revenues have grown by 10% to rupees 816 crores from rupees 743 crores. The net profit attributable to shareholders of the company stands at rupees 221 crores from 254 crores in the previous year, which is a decline of 13%. The decline is due to the added contribution to the Core Settlement Guarantee Fund, we call it as Core SGF, to the tune of rupees 55 crores at a consolidated level, which is an increase of 89% year on year. This is on account of added contribution to the currency derivatives and EGR segments. I will now share some of the key financial numbers on a consolidated basis for the year ended March 31st, 2023 as compared to the previous year. The clearing and settlement operational revenues increased by 64% from 45.3 crores to rupees 74.3 crores. Treasury income from clearing and settlement funds has increased by 51% from rupees 55.1 crores to 83.2 crores. Other operating revenue, which includes data dissemination fees, training income, software income, has increased by 32% from 68 crores to 90 crores. Actually, it's a 32 crores increase as well. 32% and 32 crores increase. Investment income increased by 12% from 97.5 crores to 109.3 crores. The operating EBITDA for FY 2023 stands at rupees 197.4 crores from rupees 213.1 crores last year. Operating EBITDA margin reducing to 24% from 29% earlier. The net profit margin stands at 22% as against 28% last year as a result of increase in computer technology related expenses and increase in core SGF as stated earlier. On back of these financial results, it's my pleasure to inform you that the Board of Directors of BSE Limited has recommended a final dividend of rupees 12 per equity share having a face value of rupees 2 for the financial year 2022-23 subject to the approval of shareholders in the ensuing annual general meeting. The total payout with a dividend payout ratio of 98.8% of the current year's profit would be rupees 165 crores on a standalone basis. I am confident that as we enter FY 2024, we are well positioned to meet the evolving needs of our customers and create value for our shareholders. On the business side, let me start by covering our primary market segment. Fundraising by India Inc. continues to be buoyant, and BSE platforms continue to remain as one of the preferred choice by Indian companies to raise capital. In FY 2023, the BSE platform has enabled issuers to raise rupees 14.4 lakh crores through issue of equity bonds, commercial papers, municipal bonds, InvITs, etc. The total number of investor accounts registered with BSE now stands at 13.05 crores, which was 10.15 crores in the previous year, a growth of 29%. As you may be aware, the equity cash segment has experienced a period of subdued performance in FY 2023, likely attributed to challenging market conditions. But mutual fund segment at BSE has been showing impressive and sustained growth. For the year ended March 31st, 2023, the average daily turnover in equity cash segment stands at rupees 4132 crores, down by 23% as compared to last year. The average daily turnover in equity derivatives segment stands at rupees 1.38 lakh crores, down 48% as compared to the last year. The average daily turnover in currency futures stands at rupees 18,569 crores, registering a growth of 50% as compared to the last year. The average daily turnover in currency options stands at rupees 7,030 crores, and with the changes that we have brought in, we feel there will be growth in this segment. Moving on to our mutual fund business, BSE Star MF, our comprehensive platform, this continues to generate compounding revenue growth and delivered another year of record revenues and performance, up 56% year on year to reach rupees 78.6 crores. The strong growth is a testament to the strategic broadening of our business model. This gives us the ability to deliver growth through an array of macroeconomic environments and BSE's continued commitment to the equities market and mutual funds in India. The total number of transactions processed by BSE Star MF grew by 43% to reach 26.5 crores transactions in FY 2023 from 18.5 crores the last year. BSE's market share stands at 87% among exchange distributed platforms. The BSE Star MF has been consistently reaching new heights in terms of transactions, with the platform processing a new high of 52.3 lakh transactions in a single day in April 2023. On an average, the platform processed over 2.2 crores transactions per month in FY 2023 as compared to 1.54 crores in FY 2022. This demonstrates the scalability and reliability of BSE's platform, StarMS. Now I shall cover developments with our subsidiary companies. At India International Exchange ISSC or India INX, the BSE promoted international exchange at GIFT City, the average daily trading turnover stands at USD 13.1 billion, with a market share of over 90% for FY 2023. India INX has about USD 70 billion medium-term notes established and about USD 50 billion of bond listings till date. India INX Global Access Platform for investors wanting to invest in global securities has grown to reach a total trading turnover of USD 27.1 billion for FY 2023. On the insurance distribution front, BSE EBIX Insurance Broking, where BSE holds 40% stake through its subsidiary, BSE Investments is now integrated with 26 insurance companies. The total premium collected is rupees 24.3 crores for FY 2023, a growth of 103% compared to the previous year. BSE Agricultural Markets, called as BEAM, a transparent commodity spot trading platform to facilitate spot commodities transactions across the value chain, has now enrolled 1,342 members and executed trades worth rupees 148 crores in agri and steel segments on the platform during the year. The company is working very closely with several state governments and their agencies for direct procurement and disposal of commodities. In closing, I can say FY 2023 was a challenging but pivotal year for BSE. We have made important progress on our priorities and we have taken significant steps to improve our product profile. As we move forward, we feel that there is a significant opportunity to continue to expand and evolve the products and services within our core business. From the continued investment in our mutual funds to the innovations that we bring to our trading systems and market data products, BSE is well positioned for long-term success and growth. I'm very focused on doing this in a way that helps BSE as well as the market participants, and this will stay our theme for the years to come and will make BSE more vibrant. We are set up well to build on this work in FY 2024 as we continue investing for future growth while remaining focused on delivering strong financial performance. With these updates, I now hand over the call back to Anand. Anand?
Thank you so much, sir, for these updates. With this overview, let me now welcome you all once again for the Q&A session. Now handing over the call to Faizan. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. Hi, good evening, everyone. And firstly, let me congratulate on a great set of numbers. Just questions on the financials. So if I look at the revenue or the income line item, so there are some like the other security services which has gone from 26 crores to 35 crores on a Q&Q basis. Other operating income has doubled literally almost from 18 crores to 35 crores. And so has the other income jumped from 6 crores to 12 crores. So could you explain these line items as to what has caused the jump in these line items?
Prayesh, just come again one by one, which you said?
Other security services has gone up from 26 crores Q&Q.
Okay. Then other thing? This is one.
Other operating income going up from 18 crores to 35 crores.
Okay.
And other income going up from 6 crores to 12 crores. 12.5 crores.
So, Prayesh, when the other security services income comprises from the revenue which we are deriving from other group companies, in terms of not only treasury income from clearing and settlement, it is clearing and settlement transaction charge, clearing and settlement charges, and it also includes various. It also includes various fees such as your admission fees, processing fees, and all other fees. So this is because this year there was an increase in the margins and deposits also which we received, and the overall clearing activity which happened. So there is an increase in the other security services. Other operating income basically comprises of other operating income comprises of the income which we have received, which is considered with respect to our subsidiary BTPL, our technology subsidiary, which is the BSE Technologies and BSE Institute. So our technology services firm, BSE Technologies, actually had a better year, and its revenue rose significantly during the current year, and that was the reason why you see a big jump from 18 crores to 55 crores there. And other income, the hike which you are seeing, that is arising mainly out of the income tax refund which we have received, the interest thereon, which is considered as an income for the current year. And there is a minor reversal of about 2 crores with respect to certain expenses of earlier years, which has added to about 6-7 crores of the overall increase.
Okay. That's helpful. So, this other security services and other operating income run rate, is this sustainable at this rate, or should we think about it differently?
More or less, it is a forward-looking statement which you are asking for, but I think we'll try to do as much best as we can.
No, just reframing this question rather than converting into a forward-looking one. Out of the 35 crores in other security services and 35 crores of other operating income, is there any one-off items in these line items?
No, there is no one-off item in this one.
Okay, great. And the other question was on expense line items. So if I look at your employee expense run rate, has been trending down. We are at 42 crores in this quarter, and also technology cost has come off on a sequential basis, but on a YOY basis is still higher. So how should we think about these two line items from a FY24 perspective?
From a FY24 perspective, again, Prayesh, employee cost obviously means we need to retain talent. We need to hire new talent to come up with, to manage the new initiatives. And obviously means there will be an upward pressure, which will be normal, which can be seen in any other organization. Same with technology costs also. While we will do our level best to manage costs to the best of our capabilities, but means there are normal escalations which cannot be avoided year on year, and obviously there are certain improvements which we need to make, upgradations which we need to make year on year, which will be there as usual. So obviously the cost cannot be the same as the previous year
in the subsequent year.
Okay. Got that. And just one more thing on the tax side. Could I just have a tax rate for next year?
Tax rate will be around 35 or 35% odd. We have a huge MAT which is unutilized as on date, and for that, we are investing heavily. Whatever we are investing in taxable securities. So we'll attract maximum marginal tax rate probably in the foreseeable future.
Okay. And I'll come back in the queue for more questions. Thanks.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Rishabh, an individual investor. Please go ahead. Rishabh, please go ahead with your question. Your line is in talk mode.
Hello.
Your audio is breaking. We can't hear you.
Hello.
Mr. Rishabh, we request you to please rejoin the question queue. We'll move on to the next question from the line of Amit Chandra from HDFC Securities. Please go ahead.
Hi sir, thanks for the opportunity. So my question is on the steps that we're taking to revive the market share in the cash, and also the steps we are taking on the currency side, and also we are launching a new the derivatives contract. Right, so all these steps obviously are on the positive direction, and we are seeing improvement in our numbers and margins also. But how confident are we in terms of gaining back market share in the cash segment, which with the initiatives that we are taking? And also we have spent on the LES schemes over the last many years, and we have tried that earlier also, maybe 5 years back, on the derivative side. And again, we are trying on the derivative side to regain some market share. And as of now, we have negligible market share there. So what's your thoughts on these two segments?
Yeah, thanks for this question, Amit Chandra. My reply may be slightly sounding philosophical. The efforts, whether we believe it will bring back the market share, any one effort in itself is not going to bring market share. We just narrated only a few of the efforts that we are making. Market share is a function of how much of market participation happens, and there will be multiple interventions that would be required from a market perspective for this to effectively happen. This not only includes making changes, but also making members aware of the requirements and the importance, and talking to them and bringing them back, and getting attention into the BSE's platform from the larger public as well. Which is all what we are trying to do at this stage, and more every day new things emerge for us, giving us ideas as to how we can better reach out to the marketplace. So if you ask us whether we are confident that it will bring back, of course, yes, sir. We have to feel confident about whatever we are doing, and we go into the right directions. At some point of time, all the efforts that we are putting in will fructify, and we will gain back whatever we have ceded away in the past. That is the feeling. The second question is, well, LES was there, it was discontinued now, a lot of efforts were made in the past. We are relaunching. What is our view about it? When I think about it, I actually remember a story of the past. I'm sure you would have heard about this story as well, of Robert Bruce, who lost multiple times a war against the King of England, and he ran away from one of the battles into a cave, and he was sitting, and he was watching a spider. It was trying to climb up the wall of the cave. It was going on falling down, but the spider never gave up. It tried multiple times. On the 7th or 8th attempt, it succeeded and it climbed up. That was a big news. That was a big inspiration for Robert Bruce. This is the actual story of 1300s. I'm sure if we Google, you'll be able to see. Then Robert Bruce went back and with rejuvenated energy fought back, and he won the battle. The message is try again. Once or twice, though you may fail, Try again till you succeed, try again. And we are doing it with rejuvenated energy, with trying changes which may look very simple, but which may be very material. We have taken market participants into confidence. We have requested them as to what changes would bring in. So maybe what did not work in the past may work. That is the confidence and expectation with which we are proceeding. I hope I have answered your question.
No, sir, it was a very comprehensive answer, and I also expect BSE to do well in these segments. So, but second question would be on the cost side. So, historically, we have spent on several initiatives which are not yielding results. So, are we becoming more cognizant on the spending that we're doing on these initiatives, mostly from an ROI perspective? And also, if you can throw some more light on what's happening on the INX side, with is there some consolidation happening, like one exchange there, and also on our expenses that we're doing on INX, can you see some drop there also in terms of expenses there?
Yeah. So every decision in respect of listed corporates like us, if you look at it, are taken collectively considering the facts that are available at that point of time, the best interest of the corporate entity. All the expenditures that would have been made prior to me coming and joining here would have been done or were done in that same spirit, and some of them worked, some of them did not work. To enhance liquidity enhancement scheme is one of the measures that was tried. In retrospect and in hindsight, when we look at it, probably it has not delivered us much results. So what is not delivering results should be abandoned and we should try something new. That's why we are now thinking about product differentiation and product interplay, which is what we should highlight to try to garner volumes. That's what we are trying to do now. When you do that, incidentally what happens, there is a better position in the balance sheet and profit and loss, and there is a better return on investment. It is just not only the return on investment which is driving you to cut down expenditure. It is also what is effective, what is not effective, what is the cost, what is the benefit. That type of an analysis is what is driving us to take these type of steps. That is one part. On the INX part, it's a very, very, very important question that you have asked. It is very close to our heart because it's a national priority, and therefore we would like to ensure and do anything that is possible that we as India are able to provide a place where all the foreigners are able to converge and trade with us with no export of Indian markets abroad. This noble thought has made us to start the exchange first and clearing corporation, well capitalize it, and we are running it well with a good amount of market share, as you would have seen, with 90%. So this is just a starting, in my opinion. Lot of changes are happening in that space, and we are going to be present there in whichever way we can to ensure that the national dream of having a gift city in India materializes, and BSE is, as always, a leading part in this noble effort.
Yeah. So thanks for that. And one last question. So, this is an answer. So, we have seen the operating cash flows being negative for this year. So can you please explain what has led to this? And
But as you are aware, that this year was the bad for capital markets. All exchanges, trading volumes went down, not only in India, globally also. And it has a cascading effect on all our revenues across the board. So since the operating income, has a hit, obviously it also affects our operating EBITDA and operating margins. At the other side, our Core Settlement Guarantee Fund, we had to make an additional contribution of 26 crores over and above our previous year. So we made 56 crores of contribution to Core Settlement Guarantee Fund in the current year, which was one of the main factors resulting in our operating income actually showing a dip as compared to what you would have expected.
Thank you, Mr. Chandra. May we request that you return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Good evening, sir, and thank you for the opportunity, and many congratulations on the good set of numbers. Firstly, sir, I would like to know this discontinuation of liquidity enhancement scheme and the support that we are giving to software and hardware services. The total saving together is 22 crore or just the liquidity enhancement was 22 crore in FY23?
It is close to 32 crores of the savings which we expect due to discontinuation of this scheme.
Okay. And sir, the way we have discontinued for FY24, are you having any target in terms of start charging on some of the segments where we are not charging? So is there any thought process around that?
So that's a very good point that you are making. There are two objectives always for any entity like us. One is improving liquidity in a market segment so that we are serving better the market. That's a very primary objective. That's our commitment to the marketplace. Commitment to the shareholder is making revenue out of it. While both of them run hand in hand, the timing will have to be very apt to manage that both are fulfilled properly. So while we today have some of the services where we are not getting any revenue, which is given free, we are not in any case having any market share. So that is the place where we are trying to sort of increase our presence, and we are trying to get more liquidity there. And once we are able to get some traction, we will of course be charging so that we serve both the second interest, that is, the interest which we need to take care of the shareholders. So it goes hand in hand.
Understood, sir. But no numbers that you can share that at probably this level, once we have 5% market share or something like that, that we would look to charge, so that we have some indicators which we can track.
That's a very valid question that you are asking. I wish I am able to provide you a number. I will, if it is anything which BSE as an entity can give us an answer, we would have immediately given. It is all purely market driven, as you would certainly appreciate. You are from a securities firm. I'm sure you appreciate what I say. So it's a question of evaluation, right? So we have to see from May 15th how the equity derivative segment is shaping up. The changes that we brought are all from March only. So it is just 1.5 months that has run away. So we need to do more. We need to wait and watch. So I will not be able to say at what level of market share I will be able to start charging more in respect of whatever new segments where I am not charging. In equity options, equity derivatives options, already I am charging. It's a smaller number, which will be revisited soon. In equity futures, equity index futures, I am not charging anything. Once there is some traction, we will charge. Some of the charges we have already started, as you may be knowing. Whatever free services were there in respect of co-location, today we are already charging to defray the cost at least to start with, and over a period of time to convert it into a profit center. So it will be baby steps. It will be in the right direction. It will not take too much time, but it will take some time to ascertain.
Understood, sir. SGF has been a big hitter in FY23 to our profits. Based on the exit run rate, do you think that there could be further contributions which would be required under SGF, or for the time being we don't see any significant contributions coming in?
Yes, contribution to SGF depends on many parameters. One is your total volumes, concentration of positions, open interest, volatility in the scripts, contracts. So frankly, it is simply impossible for us to give a judge or project anything about the next year, because we ourselves don't know.
Thank you, Mr. Agarwal. May we request that you return to the question queue for follow-up questions? Thank you. The next question is from the line of Pankaj from Ace Lansdowne Investments. Please go ahead.
Hi, thanks for the opportunity and congratulations for the great set of numbers. My first question is, as you mentioned that you have done some changes in last quarter on the tick size. for the equities as well as the currency
Okay,
options.
Mr. Pankaj,
So,
the audio is not clear from your line. Please use the handset mode.
okay, am I clear now?
Yes, sir.
Hello? Am I audible? Oh, sorry. So yeah, my first question is, so you mentioned that we did some changes in last quarter around the tick size, like for equities and for the currency options. So in last couple of months, have we noticed any correction in the volume because of this? Or is it too early to go to that?
No, it's a fair question that you're asking. What we have seen is in respect of tick size, the market, there are multiple things which we have seen. The overall impact cost in respect of these securities, we have found as coming down. If you look at it, what was the origin? The origin is up to 15 rupees, whatever securities were there, we had a tick size of 1 paisa. We found in respect of these securities, we had a better market share, better delivery percentages, and also we have a better impact cost in respect of these securities. We thought that is very beneficial to the market. We wanted to mimic it for slightly a higher number of securities. So we went up to 100 rupees. Whatever is up to 100, the tick size was changed. We find all the three things holding good. We find the impact cost has come down. Our market share in these securities used to be around 9%. Now it is around 11%. A 2% increase in 2 months, which is short of, I can say, 20%, 20% we can say is an increase in the volume because in the market share, because from 9 to 11% is roughly that way. It is still a long way to go, but certainly it has started showing green shoots. And in terms of delivery percentages, we are very happy to tell you around 80% of the total trades in respect of securities up to 100 rupees at BSE results in delivery. When you compare it to the national average of 19% in other exchange, I think it's a very big number, I feel. So I think the purpose for which we launched this is materializing. But as you also rightly pointed out, it is early days. There will be some more traction happening. In respect of equity in currency options, what we found is, in respect of this 10 paisa strike price intervals, around 65% of the trading is happening in these strikes. So that means we have made some difference. We have started making some meaningful difference in respect of multiple new participants who are entering into this market. So these are some early indicators for us. Currency options change came around March 6th, I guess. It's early days, but I think we are making a dent.
Okay. Thanks for that. Okay. My second question is around that ASBA implementation in the secondary market. So what can be the possible impact for our treasury revenue with ASBA implementation in the secondary market?
It will be too early to comment. Pankaj, because we are talking about ASBA implementation where the contours of the regulatory change in itself is not becoming evident. You may like to note that this is not an exercise from SEBI side to increase the revenue of MIIs. It is an exercise from the regulatory side for improving the investor protection. So the angle on which it is looked in itself is very different, and contours are not clear, so it will be very difficult to give any comment on this stage.
Okay, no problem. The last question is, what is the cash and cash equivalent as on 31st March? Own cash and cash equivalent.
So, Pankaj, as you know, that we distribute more or less the entire income which we received during the year. So, and our capex is not very high as compared to many other organizations. So, we still have 1,400, as we would have told you last year also. In all calls we have been telling this, and we continue to have about 1,400 crores of free cash for shareholders in our standalone books.
1,400.
Yeah.
Okay. Sorry, if I'm not, I think the last quarter it was around 2,200 crore.
That is the total cash in our books. But when you talk about cash in books, I generally understand that it is meant to be free cash for shareholders, right?
Correct. Okay, got it. Thank you. That's all. Thank you very much.
Thank you. The next question is from the line of Rishabh, an individual investor. Please go ahead.
Hello. Yeah, I'm audible.
Yes.
Yeah, Rishabh.
Could you please guide me regarding the fee structure in the Star MF platform?
What happens, Vishal, is that what we recover from the AMCs towards the services comprises of two parts. One is the transaction charges for processing the transaction, the orders, and the second is the recovery of the costs which we incur in handling those and in processing those transactions. So there are various slabs which become applicable to different parties depending on different levels of operations. So I can tell you one thing, that the overall recovery for us is about 4 rupees per transaction.
Nayan, if I may add, Rishabh, if your question is whether there is any cost to the retail investors, there is no cost. If you are asking whether there is any cost to the intermediaries, there is no cost. It is what is the recovery, what we make from AMCs for the services we render to the AMCs.
Mr. Rishabh, your audio is not clear from your line.
Oh.
Mr.
Hello.
Rishabh, yes, please go ahead.
Yeah, I'm saying that during concern to the core SGF, can I know the reason for that?
As Nayan told some time back, the SGF computation is based on a complex algorithm that works, which takes into account multiple things like volatility, cleared volumes, etc., etc. So that is the reason because of which, based on that algorithm, the number changes, a number is arrived at, and if we have to contribute, we have to contribute. That is a SEBI-stipulated algorithm, and based on which this happens.
Thank you, Mr. Rishabh. May we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Vikram Kotak from Ace Lansdowne Investments. Please go ahead.
Thank you. I'm audible. Hi, Sundar sir. Hi, Nayan. Hi, everyone at BSE.
Hi.
First of all, congratulations for a good set of numbers, and I can see a lot of sweat, in the numbers, and a lot of small changes which you are doing is paying somewhere. So I have 2 questions. One is I don't know whether I joined late, so maybe if you answer, then you can, sorry for that. So one question which you brought with 1 paisa, tick size, how do you see this as, kind of helping? Did you took a survey for brokers? How it's helping you to kind of get more closer to the investors and the broker community? That's my question number 1.
Can I answer it?
Yeah.
Yeah, see, actually you missed the answer. It was a very elaborate answer for it.
Sorry.
So it's okay. I will just repeat it in a sort of summarized form. The 3 guiding factors which because of which we thought we should do this is, one is the impact cost, improving delivery percentage, and third is more investors through market share. All the 3 we are finding some traction. The delivery percentages in respect of these securities at BSE is 79%. Around 80% you can take. The impact cost is significantly reduced in respect of these stocks as we compare it with the other exchange. And our market share, which was hovering around 9% before the change, has gone up to around 11% in these securities, overall market share. That is a 2% increase over a base of 9% increase.
Right. Got it. And Sundar sir, second question for you is that I know you started a few months back and you've gone through the first 1 full quarter. And where do you see in terms of transition, and where do you see in terms of low-hanging fruit, or in terms of strategy? You see a long way to go, or you are seeing that things are panning out quite quickly? And this is a difficult year, so it's not easy to really implement and really see the result because the tough year for capital market. Do you see whatever steps you are taking, if there's a 2-3 year of bull market or good run on the equity market, do you see the more operating leverage will be playing out to what changes you brought till now, and what are the more changes in offering? That's my question. Thank you.
No, I'm honestly not able to answer your first part. If you are asking for what changes in the offering, that is easier to answer.
Okay.
I'm sorry, I did not understand the first part of your question. Can you simplify it in a single line?
Yeah, I'll simplify that. Whatever changes you've done in last 3 months, whether it's a 1 paisa transaction, 1 paisa thing, or putting the currency derivatives freebies, stop, bringing more products, right? it's a tough year. So it's not, you can't get all benefits in the tough year. So if the year was good, we see a huge operating leverage there to play out in all these areas of changes which you brought. That's the first question.
Okay. So the simple answer to it is, yes, it was a tough year. And I joined in the last quarter, and the moment you join, immediately you don't hit the ground running. It takes some time. Notwithstanding that, we have tried to bring in the first quarter in itself multiple changes. And as you may be aware, we are relaunching Sensex and BankX derivatives in slightly a modified form based on market feedback from Monday onwards. I'm sure you would be tracking it.
Yeah.
And incidentally, whoever any of you are trading, we would like your full support to BSE and these derivatives contracts. We feel that they are wonderful contracts for multiple reasons. Sensex, as you know, is one of the oldest index in India. It represents 30 stocks and 12 sectors. And since there are 20 stocks less than 2 sectors less than this is quick. This is sensitive index. That's why it's called as Sensex. It incorporates the market price into the price information into the index very fast. And therefore, that in itself creates a situation of lead and lag with the other big market index, which is Nifty, giving lot of product interplay possible between Nifty and the Sensex, which is a Sensex derivatives as pair trading. Apart from that, because our contract is expiring one day late, in respect of people having positions on Nifty options on Thursday, if they feel that they should recover the theta by waiting one more day, they will be able to transform the position of Nifty options to Sensex options by paying a smaller theta and probably landing up in the money. These are just 2 strategies I am talking about. There are multiple strategies. This is the reason why we have carefully selected Sensex 30 and BankX derivatives. BankX is very akin to Bank Nifty, and as you know, both of them enjoy a 99.96% correlation with the other indices of the other exchange, and they have better volatility profile, and the return profile of Sensex is far superior, and its CAGR has been a very high percentage in the last 5 years. All this you will be aware of. The reason for bringing this is to rejuvenate the market and bring in vibrancy. If you're asking me whether we have belief that it will change the operational capability, the honest answer is yes. As far as what the future plans are, which is the second question that you are asked, multiple changes could be there and multiple products could come. We are only talking about 2 products now, and they are both index products. Today, if you look at the market is suffering from a very big concentration risk. The entire volumes are concentrated in a single trading venue, in a single segment, in a single product with around 2 or 3 indices alone, taking care of almost everything in the market. This is a huge concentration risk. BSE, in order to provide vibrancy, is trying to address this risk for the nation and for the investing public by providing in new products. We are starting with index. We are sure in the days to come, we will be having more equity-related products coming in derivatives, more indices, broad-basing the market, and providing protection to the market from the concentration risk which they are suffering today. This is the vision that we have, and it is not going to happen in a day, as you would appreciate. It will take some time, and the entire tenure of mine, which is next to 4 years, is there for me to contribute whichever way I can to the growth of the nation and BSE.
Super. All the best, Sundar sir, and all the best to BSE. Thank you so much for elaborate answers. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Kumar from New India. Please go ahead.
Hello. Good evening, sir.
Good evening.
Well, my question is, what is the future of gold exchange and social exchange? Are we, in future, we could get some revenue in this segment?
Sorry, which gold, what you said?
Gold exchange and social exchange.
Gold exchange and social exchange. See, social exchange, you will not be able to get any, that's not a revenue making exercise. That is a contribution to the society as a corporate citizens, what we all need to do. From social stock exchange, at least at this point of time, I'm not expecting any revenue. I am here to serve the larger part of the sections of the society through SSE. Gold bullion exchange is a separate exchange, which is shareholding of multiple other exchange. So it is a fledgling exchange. Gold has a great potential in India. We are talking about 800 tons and whatnot, but still we are not the price setter. So India is having interest in trying to make India the price setter for gold. I am sure, since it's a single exchange with multiple people joining together to promote this exchange, this being in GIFT City, which is very close to our heart and nation's interest, I'm sure in the coming days it will grow well. I'm not sure whether you are tracking our EGR. That is another effort for onshore participants we have put in place. It is early days. There are some teething trouble in terms of taxation and other areas. We feel we will be serving the market better very soon with some changes if it comes through the e-gold receipts as well within India.
So my next question is, how much revenue we get from power exchange? We have some shareholding in Hindustan Power Exchange. Do we get some revenue from that?
22. So, Rahul, right now we are not earning any revenues or share of revenue from SPX. It is still in the process of, it's a new exchange and it will take its own time to grow up and revenues. So it will be very difficult to say what type of revenue share or profit share we can get from them. However, we are providing technology to them through our group company, BSE Technologies, and that is a revenue which we earn against our services to them. So we'll probably have to wait for some time before we get some return from the investments which we have made in SPX.
Okay, thank you, sir.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for the opportunity again. Firstly, on the existing businesses of transaction charges or listing fees, any thoughts on increasing the rates in FY24?
I probably do not understand the question. Are you talking about transaction charges or listing fees? Which one you are talking about, or both?
Both. In fact, both I'm asking whether there are any thoughts of increasing them in times to come.
See, the rates are sort of competitive rates as far as listing is concerned. So unilaterally to make a comment that we will increase is not possible. It's not any sort of joint effort to increase or decrease, but the market is very competitive, so accordingly the pricing gets made. So it will be a function of multiple things, where the entire market is moving towards in terms of capital raising, IPOs that come into market, buybacks that come into the market, and on and on. And so therefore, it's not a unilateral point of time decision to say that yes, indeed, we will be raising listing fees. That is one part. On the transaction charges, I'm not sure whether you missed the point which I was making slightly earlier. We do charge subsidized rates in multiple areas, and we don't charge in some areas. If you look at it, for example, in equity options, our charges are very low. Currency options, our charges are almost 1/10, I guess, compared to the competitor. And in respect of equity futures, we do not charge anything at all. Point of time, it is not making a difference because we are not having much of a market share to boast. But we are doing everything to ensure that we will get some market share. So as and when we get market share, will we be revising the charges? Will we be introducing charges? Yes, we will be introducing. We have already started charging certain services which we were not charging before. Like for example, in Colo, where it was all free earlier, which was in a way taking some amount of the P&L, right? So which was talked about, the technology scheme which was talked about. So today we have started defraying the cost. So like that, in currency futures again to mention, our charges are 1/5 of what the competition charges. So there are scope for us to increase. We are trying to deepen the market, and once we are deepening the market, certainly we will be working towards increasing the charges and taking care of the shareholders' revenues increase as well.
This helps. On the Star Invest, you mentioned that it's 4 rupees, but if I look at FY23, it's far lower than that. So is that the run rate that we should look forward going ahead, or how should we think about that?
It's like just that over a period of time, as our volumes increase, the lower slabs will get applicable. And to that extent, there will be a downward trend with respect to the average charges which we are earning per transaction. But as you'll note that we are able to increase our revenue by almost 55% from 50 crores to 78 crores in this current year. So obviously, with higher transactions coming on us, obviously that will have an upward impact on our revenues.
Got that. Yeah, that's it from my side. Thank you and all the best.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Anand for closing comments.
Thank you, Faizan, and thank you everyone for joining us today. If you have any further questions, please feel free to reach out to us at bse.ir@bseindia.com. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of BSE Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.